Nike says just do it. But right now, you might want to just not buy it. This stock has been absolutely destroyed. And with earnings coming up, the question is this finally the bottom or is there more pain ahead? Find out in today's video. Nike is going to be reporting earnings Tuesday at close, and they are expected to post lower profit as they continue to try and turn around the company. And you can see here in this article that's available on TradingView, Nike has been looking to stage a turnaround, including efforts to rebuild its wholesale channel, grow its running business, and clear out old inventory. The company's strategy has hit some snags, though, with continued weak demand in China, tepid growth in North America, and added tariff costs posing further obstacles. And you could just look at the stock chart, which we're going to do here in a few moments, to see how this company has been pounded. And I want to also point out, too, about Nike's forward guidance. They're not going to hit their numbers. They're going to actually come in substantially below, at least based on what analysts' expectations are for earnings per share and revenue. But also, we know that forward guidance is critical. It's super important. You could see here, Nike's guidance will also be a particular hot topic for investors. The company's fiscal fourth quarter guidance could come in well below estimates, testing investor patience with no meaningful catalysts ahead. That is not good. The company has also historically given a high-level outlook for the next fiscal year during its third quarter call, though it's uncertain if that will happen this time around. So pay attention to see if they do give that outlook. And if they don't, that could be a signal of more trouble ahead. And you can see here that UBS analysts say they don't expect any fiscal 2027 commentary, given management has only been providing only forward quarter outlooks lately. And when you look at this in conjunction with the turmoil in the Middle East, with Iran and the United States, this is not a good environment for Nike to be reporting into. And at first glance, it looks like there's more downside ahead, but let's take a look and see what the charts tell us. Let's begin on the daily chart to see where we are today. And again, there was a period in time here in February where it did get a little bit of a push. It went above the 200-day exponential moving average, but you could see that push did not last very long. In fact, look at this large wick here. So it poked its head above that 200 into the $68 mark, actually above it, and then immediately rejected. And you got nearly a doji candle, nearly an indecision candle. We have a little bit of a real candle body here. So this is more of a spinning top, but that really marked a reversal from not really a significant bounce, but compared to where Nike is now, enough of a bounce that I'm sure anybody who owns Nike would welcome at this point. But from there, and that was February 20th, you could see that it dropped down to the 50, was compressed in between the 50 simple moving average and the 100. And then when it broke down out of that tight range, it just started its collapse lower. And what is interesting here is that two price areas of significance. First of all, it's going to be the April 2025 lows. If we come back here, we could see that it is broken below those lows. So all the weakness that it had off of the tariffs liberation day in 2025, it has since come lower. And interestingly enough, there is a gap if you go all the way back to 2016 that needed to be filled. And guess what it did on Friday? And you can see the price is hanging out in that gap today as Nike trades around $51.26. And if we just look below us, we can see that there are still a few more gaps to the downside for this thing to fill in the event that it's going to come lower off of earnings. And again, this environment with the macro, with the war, does not really offer support for companies announcing earnings. And so you do have an October 2014 gap here at $44.46. So watch to see if that gets filled. That would be a pretty significant move to the downside here for Nike. And if it takes out that gap, we have another gap down below us at $40.34, and it's from September 2014. So you could see that we have taken out April 2025 lows. We've taken out COVID lows of 2020 where everything was dropping before the big rally, of course. And now we have filled that 2016 gap with two more gaps here to the downside. And so there are levels, just because this thing is so beat up, there are levels below where this thing could fall should things be poorly reported in the earnings call. So don't think that just because it's beat up this bad that it can't fall further, because it absolutely can. And you can see that in terms of resistance above, there is quite a bit with the 50, the 100, the point of control, these large volume nodes, and the 200. So in order for this thing to push, it's going to take a pretty significant catalyst in the earnings call. Who knows if that's going to happen? It doesn't look promising, but we have to give them a chance. And you can see that there is an unfilled gap here right at the point of control from February 26, around $63.67. So if this thing was to push higher and get a gap up, if it was able to break through the 50 and the 100, we would want to see if it could fill that gap. But this is quite a bit of work for it to do. That would be a $12 move, and not that it can't happen, because Nike has moved pretty significantly off earnings before. We're going to look at previous earnings reports here in a second to get an idea of where this thing could go. But at this point in time, this chart is overwhelmingly bearish. And let's just zoom out a little bit so you could see how far this thing has dropped. And actually just come over to the monthly, because this has been a stock that's been around for quite some time. And you can see here the all-time high on Nike, $179.28. So you can see just how far this thing has fallen. And for all you chartists out there, you could see a bit of a head and shoulders pattern with a lower right shoulder for where this thing broke down. And it's just dripped lower and lower since then. The one thing that I will point out here on this monthly chart is you could see where we fill this 2016 gap and come below those April 2025 highs, is that we are back into this support area that really established itself from 2015 when it was acting as a resistance, and then it flipped into a support into 2016, 2017. So if there was an area that was of interest to buyers and investors, this could be it. So just keep that in mind. But the chart, again, is overwhelmingly bearish, because we do see on the monthly, we're below the 200. On the weekly, we are below everything. You had a death cross that occurred on the weekly back in December of 2022, and it's been stuck there for quite some time. And then obviously we come over here to the daily, and we could see that we had a death cross occur here on the 25th of November. So this thing has just been pummeled. Now, in terms of what happened the last few times it reported earnings, here was their earnings report from December. And you could see that this was a gap down. Let's measure this out. This was from the close to the low of that day, about an 11% move, a little over 11%. $7.46 to the downside. You could see that it got near oversold levels, which interestingly, right now, we are highly oversold here on the RSI. So the previous report, we had a gap down. If we come over here to, this was October, we had a gap up, right? So we were down below that 200 at that point. Let's go ahead and measure this one out. Let's try to do this as cleanly as possible. And we were a bit oversold, and this thing did push up to, let's see, about $74.64. So 6.83% increase, $4.77. So you did have a little bit of a gap up there in October. Again, right here. Actually, it was September 30th. So September 30th into October 1st, it did have a gap up, but you could see it was rejected there off the 50, and it came right back down. And then we go back to this past summer. So this was June 26 when they reported, and you did have a really nice gap up. I do remember this report because I actually had a play on this with options. And you can see from the close to the high of that wick there, 18.51%, $11.56. And it was trading at $74 at that point. So a nice move higher there for Nike. So of the last three reports, two went higher. The previous one went lower. And then if we come over here to this was last March. This was when all the tariff weakness was occurring. So if we go from the close to the low, we could see that we dropped, let's measure this out, down to the low of that candle, about 9.52%, $6.86. So 50-50 of the last few earnings calls. And you could see that when it reported last year, in the midst of all that downside from the tariff noise, it was close to being oversold at that point, and it still had a gap down, and that led to a lower move. So there's nothing promising about this chart just yet. We don't know what the company is going to report on earnings, and there definitely can still be more downside potential here for Nike, especially watching these gaps at 44.46 and 40.34. However, keep in mind, like I pointed out earlier, we are back down to an area where there have been bounces before, bounces in April of last year, bounces 2016 into 17, and this area that served as a resistance back here in 14 and 15. So let's see if this is a demand area and buyers want to step back in, but it's going to take something in the earnings report, the earnings call, that gives investors something to be hopeful for and optimistic about Nike's future. So let's see if they can deliver on that and if they will move higher or continue to drop lower in this volatile market. So what will you be doing? Are you just going to do it and buy Nike? Do you believe in their upside potential? Do you feel that this is at a value area, or are you going to continue to sell this thing down? Do you think there's more weakness ahead? Drop that in the comments below. I'd love to hear your take about where this ticker is going. And I want to thank you for watching this video. Make it a great day. Be grateful. And as always, honor the moment. Thank you so much, everyone, for watching, and take care.